What is up, everybody? Welcome back to another episode of Bitcoin and Markets. Happy Friday out there. Hope you had a productive week. We're going to wrap up the week with kind of a grab bag show. The main topic is going to be watching and reacting to Saifedean and Brent Johnson's debate that they had with Zero Hedge about if Bitcoin can be a global reserve currency or will be a global reserve currency. So we're going to do that. But first, I wanted to hit a bunch of topics from this week. We'll go over the price and all that. So let me share my screen and we will jump into it. Of course, if I can find it, bitcoinandmarkets.com. This is the post that I put out today, and we will have the discussion on the Saifedean Brent Johnson debate. There's a need for me to bring this in, so I'm going to go ahead and reference this later. But you guys, if you subscribe to the free email list on bitcoinmarkets.com, you never miss any of my stuff. There's also ways to support the show there. So, okay, let's jump into the chart, the Bitcoin chart, 90,572 right now. Everything's looking good. One of the things that I did share over the last 24 hours was this chart. Let me bring this up. I need to cycle through my premium content that I put out yesterday, and I'll share this tab now. You can see this is a 4-hour chart, and what I did was I took the pattern from October 2023 when we had the big rip back then, and what I'm kind of expecting for this is my base case for the next couple weeks. Going up and pressuring up to that 100,000. Of course, after this, it did rip another 20% higher. So that is what I'm expecting. And if we go back to the price chart, it's following that trajectory right now. We can go down to the 4-hour. And basically, it's in line with that expectation. So another big news item for today is the Ethereum price just falling off a cliff. I actually got retweeted by BitPain, which was a highlight for me because that got a lot of likes. But so yeah, check this out. It just is looking really, really ugly for them. They were expecting this as altcoin season is back, and now it just smashed lower. Of course, Bitcoin's going up, so Ethereum tries to keep up with Bitcoin, but they're going down. They're going to be at 0.03 here before we know it. And if we zoom out, I mean, the history of last 2 years is just constantly down. I have some of these highlights marked on here, like the ETF rule change, spot ETF launch, and that didn't really do much. There was a little bit of hype, and then it died. We can go back further to some of their hard forks that were billed as supposed to be, very important merge right here. But guess when this all started? Guess when this whole downtrend started for Ethereum? Yes, the fee burn. EIP 1559. And at the time I said, they are really messing up here because Ethereum is a Ponzi environment. There's Ponzi's on top of Ponzi's. That's what built Ethereum. That's what the community was built around. That's what everything was built around. And what they do with the fee burn, they cut off the inflation needed. So instead of doing minimum viable issuance, they should have done maximum viable issuance. And they would have continued to the Ponzi would have continued to grow. But that was the death knell. And everything since then has been down. And then just the last couple of days have been horrendous for Ethereum. Okay, let's take a look at a couple other charts. The dollar still ripping higher, 106.7. Range bounds still. When this breaks out, this is going to be a pretty interesting level right here, right where we're at. If it breaks out higher, it's going to be getting stronger, and that's bad for the global economy. It's bad for banking stress out there, so we'll be watching that closely. Of course, I've been predicting that this will be range bound and that this will generally tend to get stronger, not weaker. Okay, and then that will be important for our discussion with the Saifedean stuff. US 10-year down on the day. Didn't quite finish this little head and shoulders I was discussing on one of the last live streams, but RSI is still matching that this could be some sort of topping pattern with some bearish divergences here. So we will keep an eye on that. I'm not expecting it to rip higher. Going back and forth with just a couple people on Twitter, like Luke Groman and others, where he's like, oh, this is the new normal, going higher. But look, it's lower than it was in April, and it's much lower than it was in last October. So this just happens to be a little bit of optimism going on in the market with rate cuts, China stimulus, Trump getting elected, and that is not changing the fundamentals of this heading into recession. Okay. Oil, that's another one that I concentrate on because it is the largest commodity. It had a big down day as well. Of course, I expect this to weaken because we're going into global recession. We're at the end of a 75-year credit bubble, and the global economy is going to continue to stagnate and slow. So demand for oil is going to continue to be weak and probably decline over the next couple of years or next couple of decades. So, and especially now, if you factor in demographics, there's just going to be fewer people demanding oil. And so that is going to continue down. Plus, we're getting better and better with extracting oil. The U.S. is hitting new all-time high oil productions pretty much every month. So there you go. And the S&P 500, it had a bad day today. It's still up here in some rarefied air near all-time highs. I'm not going to worry about this. Calling an end to the pre-recession trade, which is bullish stocks, bullish bonds, and bullish Bitcoin until this starts breaking some levels, important support levels. Not too concerned at this time. All right, that's a run through of the charts. We will end one more time on Bitcoin. Pumping a little bit here, 97.77. All right, what we have for some other news before we get into the Brent Johnson and Saifedean debate, I wanted to bring it to a few tweets here. So Senator Lummis's bill is getting some more attention. It was, if you see down here in this image, you can see 7/31/24. So it has been introduced a long time ago, but it's, of course, with the election of Trump, it's getting a lot of play right now. We'll see. I think they're trying to get it passed, maybe not in this Congress, but the next Congress, with all the new members, gets sworn in on January 3rd. And then the president doesn't get sworn in until January 20th. So I think they're going to try to have this on his desk ready to sign when he gets into office. But we will see about that. One of the topics about this that's been coming up now is talking about selling gold and buying Bitcoin. That should be very negative for the gold price. Obviously, rumors of selling gold and buying Bitcoin, but we're also memeing this into existence here. And I just saw this meme. This was hilarious. Not gold. Bitcoin. Strong meme game from the Bitcoin community. All right, so that is Senator Lummis's bill. Let's go into, let's see if there's any chat comments here. Hopefully everything's coming through okay. I didn't check my levels, actually. If you guys have questions, comments, concerns, you can put them down below. Also, if you're watching on Twitter on Twitter, you can jump over to YouTube or Rumble. Those comments come through a lot easier. Also, the Telegram group is t.me/Bitcoin and markets. That's where we're chatting all day long about Bitcoin and stuff. Hop over there. I'm also live streaming there with video, so you can watch everything over there. Okay. And I will make this bigger for you guys on Telegram. Sorry, that was a small screen. Okay, so that's the Senator Lummis stuff. Let's go to Gary Gensler. So it looks like Gary Gensler is going to be out. He is resigning. Of course, he was going to be out when Trump got inaugurated anyway. That was going to be one of the first things that Trump did. So Gary Gensler is like, hey, you can't fire me. I quit. So he's out. A lot of people in the Bitcoin space, or more in the crypto space, not Bitcoin, really see this as a win. Okay. But I agree with Jimmy Song here, and he had a good tweet this morning, and I should be zoomed in. So he said, Gensler was never the problem, altcoins were. And that is exactly true. Exactly true. So Gary Gensler came in. He knows about Bitcoin. He knows very thoroughly about Bitcoin. He's a big fan of Satoshi. He taught blockchain courses at MIT, at least had whatever you call those, where it's just a lecture. It's not even a class. But so he knew this inside and out. And when he got in, he knew that these were all unregistered securities, and he blocked them. He tried to block them. He tried to go after them. He tried to figure out a way to go after them. And all along, the scammers were trying to gaslight and say, we are different. We don't fit the Howey test. The Howey test should not be applied to us. When, as Bitcoiners, we all know the Howey test should be applied to altcoins. They do make them all unregistered securities. And even now with this new Trump thing, it just came out yesterday where he's going to try to exempt all companies that issue their own coins in the United States as exempt from capital gains tax. Now, if that doesn't admit that you're an unregistered security, I don't know what does. So yes, Gary Gensler was right. Altcoin scams were wrong. And that is what the problem was. Okay, what else do I have here lined up? Okay, 13Fs, they're coming out here too. So 13Fs are filings of all what you own for entities that have more than $100 million in assets under management. So they have to disclose what they have quarterly, and that is due by the middle of the next quarter. So being November 15th, the middle of the next quarter, all of the Q3 filings have to be in by today. Those will start slowly trickling in. The big one that we have already is Goldman has upped their allocation to Bitcoin to 700 million, almost $1 billion. But we do expect a lot of updated F13 filings, not only ETF holdings, but also the MSTR, so MicroStrategy. That seems to be a favorite of some of these sovereigns, like the Central Bank of Norway, Swiss National Bank, big entities. South Korea's one of their largest life insurance funds or pension funds or something like that was into MSTR. So either MSTR or the ETFs, those things are both Bitcoin exposure. And we expect some major 13F filings. And slowly but surely, it's going to become a must-have. You're going to have some exposure. 1% might not even be enough. Okay, they might be targeting 5% or 10%. The new bill that was introduced in Pennsylvania to give them a Bitcoin strategic reserve targets 10%. 10% of their holding of their assets is supposed to be in Bitcoin for the state of Pennsylvania. So that ups that bar from that 1% or just dipping your toe in to going up to 10%. And of course, that will continue to grow in coming years. I mean, it will be slow, but I think getting over 10% is going to, maybe 5 years down the road, people are going up to 25, 50%. Of course, as Bitcoin grows, it's going to become a much higher amount of their portfolio, their assets anyway. And we will at that time have to worry about reallocation out of Bitcoin. So think about this. If you have a fund and you want 5% exposure to Bitcoin, and so you get that, but Bitcoin triples in price, while the rest of your portfolio really just maybe stagnates or goes up 5 or 10%. The percentage of your portfolio is now way over that 5%, right? And so you have to sell Bitcoin to get back to that 5%. Will they do that? Will they just up their allocation numbers? It's possible, but it's also likely that a lot of them will actually sell to reallocate away from Bitcoin as it goes up. Okay, so this is going to have a interesting impact on volatility, both up and down, because those types of holders are stronger hands, but also they will have to sell at some points, at measured points along the way. So it will dampen the volatility both downward and upward. So there you go. That's what I'm thinking for these 13Fs. Okay, and lastly, this is going to be an interesting topic before we jump into the live debate with Saifedean and Brent Johnson, and that is this tweet from Mr. Hodl. Of course, longtime Bitcoiner, good member of the Bitcoin community, and he was responding to somebody here talking about nobody using Bitcoin. So, he calls it crazy FUD. And let me just give you some backstory. So a lot of people think that you have to spend Bitcoin to be using it. Of course, that's not the case. Savings is using. And so if you just save in Bitcoin, you're using. But Mr. Hodl's point here is a little bit more nuanced than that, even that you have to be holding your own keys on your own node to be actually, quote unquote, using the Bitcoin network. Okay. Of course, I don't agree with that. So I responded and I said, yes, saving is using. I was agreeing with him. The user experience is fine. So they were talking about hold on, let's click into Reardon's thing here. He said, exactly because we haven't fixed the user experience. All right. And I say the user experience is fine. Sure, maybe marginal improvements could be made and layer 2 experimentation could be better. But the main reason people don't spend is because of Gresham's law. No one wants to spend the money that is appreciating so rapidly. And then Hodl comes back and he says, saving is using when you're saving on your own wallet that's been validated with your node. Saving IOUs is not using the Bitcoin network. So here he's saying, he's kind of changing the goalpost a little bit, saying, adding this, here he's talking about network, and Bitcoin is an adjective. Okay. This is not even a hyphenated noun. This is an adjective, Bitcoin, and network is the noun. So yes, if you're talking about using the network, then yes. But if you're talking about using Bitcoin, no, that's wrong. I say I'm more nuanced. You can use money in any of the 3 functions: store value, medium of exchange, or unit of account. IOUs are using the unit of account function. And then, of course, then he goes back down here and he says Bitcoin network. So here he's talking about a network. Up here, I'm talking about Bitcoin. So anyway, I thought that would be interesting for you guys to think about IOUs as using it as a unit of account. So anyway, that's what we got for that. That is all leading into our discussion now with Saifedean and Saif. Going to check the chat. 111 people watching. I'm a little bit earlier than normal. Usually I'm going like 4:30 p.m. Eastern. So I jumped in here about 3 p.m. Eastern. Anyway, if you're watching on Twitter, jump over to YouTube and Rumble. It's easier to make comments there. Plus, you can like, comment, subscribe over there. Trying to grow the channel up to 1,000 subscribers. So appreciate everybody that does go over there and support that. Let me check Telegram, see if there's any comments. No comments. All right. I need some feedback, guys, so I make sure I'm going out. Okay, let's get into the video and share this tab. And I'm going to make sure that I'm plussed up on the volume. And we're going to go at 1.25 speed. Hope that's enough. Okay, so they got together. Zero Hedge is having these debates. I'm watching this from Saifedean's channel, so make sure you guys go over there, give him a like on this video as well. But they're having these debates on Zero Hedge. Some of them are pretty good. Brent Johnson is like kind of one of the people that's always on there with Zero Hedge. I have respect. I'm a fan of Brent Johnson, and I do like his dollar milkshake theory. He kind of goes away from his own base here, his own theories on this debate, but we will get into that. But yeah, I'm a fan of his. I'm also, of course, a fan of Saifedean. He is extremely clear thinker, but I think he's such a clear thinker that sometimes it gets in the way of creativity or connecting dots in certain other respects. So that is my lead in to this debate. And let's go ahead and play. What I want to do is react to the first about 10 minutes where they're laying out both sides of their positions, and I'm going to break in and stuff. That's it. Unless you guys have other timestamps you want me to look at specifically. Also, Saifedean does have one other part that I will hit at the 56-minute mark because that's his best argument of the whole thing. But there's a lot of talking past each other, a lot of making the same points over and over again. So anyway, let's dive into it.
All right, guys, welcome to what is going to be an epic debate today, brought to you by Zero Hedge and JM.
And if you guys can give me feedback on the volumes in the comments, that'd be good.
Bullion in the Bitcoin corner, everybody knows, and we've got Saifedean, and he's going to be arguing how the future of the global reserve currency is going to revolve around Bitcoin. Then we've got Brent Johnson for the dollar milkshake theory. He's going to be talking about how the dollar is going to remain dominant into the future. So guys, sit down, buckle up. This is going to be an awesome, awesome debate. So guys, first and foremost, thanks for being here. And Saifedean, if we want to start with you, and just articulate your view over maybe the next 10 years, the next 20 years, how this plays out, so we can make sure we understand that thoroughly. Then we'll go over to Brent, and then we'll get into kind of some disagreements you guys have.
George Gammon, he's been coming along very nicely. He started as being more on the Saifedean side, I think, more of the Goldbug side. Kind of straight line thinking about being an inflationist, and now he has made a big transition over the last year to being, I think, more firmly grounded in what's actually going on in the financial system. Now, if you guys are finding me for the first time, which is possible because there's 122 people watching, but I am on the deflation side of the house. I think we're at the end of a giant 75-year credit bubble. And the end of a credit bubble is deflation, a popping of the credit bubble. So we don't get out of a debt problem by adding more debt. And you can't, there is money printing going on, but it's not productive money printing. And so what happens? The debt burden just grows. And we're talking global here, not just the United States, but globally, you can't get out of a debt problem by adding more debt. And so the end is a popping of this debt in some way, shape, or form. And that is a deflationary outcome. Okay, so that's where I'm looking at this. So, of course, Saifedean's going to disagree with that. But just think about that, maybe the difference between an inflationist-based, like basing your theories on inflation versus a end of a credit bubble. There's a lot of overlap, but they're two fundamentally different assumptions here. Okay, let's go.
Okay, great. Well, first of all, thanks for hosting this, George, and thanks to Zero Hedge for making it happen. A lot of people have been asking this over the years, so I'm glad, Brent, we're finally getting to do it. I would say my case that I present for why I think Bitcoin is going to be the dominant money in the world revolves around the fact that ultimately Bitcoin is the hardest form of money that we have, and it's the fastest form of money that we have for final settlement. It's digital, automatic, mechanical money. It's a step forward in the operation of money, no less significant in the equivalent to in telecommunications when phones started to work without needing an operator to connect your call to somebody else. You don't have to talk to the operator anymore. Your phone does the thing by just pressing the numbers. You press the right number, you get the right person on the other end. There's no person to talk to. This was a huge improvement in telecommunication, and of course, it's opened the door for enormous further improvements along the line. And I think Bitcoin is like that because we get rid of.
I think that's a horrible example, actually, because that was a marginal improvement, right? That was a one-to-many improvement. That was not a 0-to-1 improvement, which is what Bitcoin is, 0-to-1 in Peter Thiel parlance. So Bitcoin is more like the printing press. It's more like gunpowder, something like that. It's complete revolution and not just a one-to-many. So because you could continue on for a long time. You can still use operators to connect. I mean, you wouldn't be that far behind. But if you're not using gunpowder, you're going to go extinct pretty quick.
of a central bank. We don't have a monetary policy. We don't have a person in charge of monetary policy. We don't have a person in charge of payment clearance. We get rid of this being a human process. We get rid of this being a centralized agency that handles it, that creates all kinds of political problems, and we turn it into a press of a button. Just like you click the numbers on your phone and then you get connected to the person you want to talk to, you click the numbers on your hardware wallet and your money is in the private, in the public address that you want it to go to. And there are no intermediaries who are required to approve this.
I think overall that's a weak argument. I mean, trusted third parties in the transactions is a good argument, but not getting rid of trusted third parties in monetary policy, because ultimately the market is in charge, right? Ultimately, the market is in charge and nobody is in charge. The Fed doesn't really do much. If you just see what's priced in, that's what they're going to do. I don't know the last time that they surprised the market, especially now. There's monetary policy is very, very weak. And, people talk about fiscal dominance, that we're going into fiscal dominance now. So I don't know. It's generally a weak argument when you're talking about monetary policy. And so I would just want to point that out.
Don't rely on them. So both of these things make, for me, Bitcoin an enormous quantum leap in monetary technology over fiat money. On the topic of Bitcoin versus the dollar, I think ultimately it comes down to the fact that the dollar is heavily inflationary. Bitcoin is continuously decreasing in its inflationary growth. So currently it grows at only about 0.8%, whereas the dollar has done something around 8% per year on average over the last 60 years or so. So if you look at the numbers for the growth in M2, it grows at around 8% per year on average over the last 60 years or so. Whereas Bitcoin is currently...
Okay, why does he have to say 60 years or so? He even repeated it. So that must be important. And it must be different if he's looking at a different time frame. I would hone in on the Great Financial Crisis was a pivotal moment in the turning of the tide away from credit-based money. And so, he's trying to pull it out to 60 years. I mean, yes, I say 75-year credit bubble, but the turning point was in the Great Financial Crisis. So when I compare things, I like to compare things to now versus the Great Financial Crisis. Stand by just a second. My daughter's just started vacuuming. All right. I have 4 kids. They're all home from school right now, and they're doing their chores. But anyways, what was I saying? So yeah, 60 years. Again, of course, he's going on the inflationist argument, and Brent Johnson goes down this road with him. But yeah, I would compare everything from Great Financial Crisis to today and not to 60 years ago. Of course, we have the 70s inflation. That's 60 years ago. So he's including that. And of course, that's at the beginning of credit-based dollar, when there was a lot of hyper productivity in credit. So you could add debt and get a lot of productivity out of it. Now we're saturated with debt. And so we can't get as much productivity out of the new debt. So it's completely different time that he's trying to lump in here with these 60 years. But overall, he's basing this on an inflationary thesis. That's the important part.
At 0.8%, so a tenth of that, and then that rate is going to drop by half every 4 years. So it's highly unlikely that we'd witness the creation of the dollar decline in any serious sense. So we're going to continue to rack up another 8% on average, or maybe 5%, maybe 10%, maybe 15%, maybe 3%. But, it's going to be a number likely significantly higher than 0.8 and 0.4%. So if you just extrapolate 10, 20, 30 years down the line, there will be an exceptionally larger quantity of dollars out there, as with euros, as with Chinese yuans and Japanese yens. But the quantity of Bitcoin is going to still be growing at an ever-decreasing rate. And so that can only translate to one thing in the long run, which is that likely Bitcoin is going to appreciate significantly compared to all these enormously inflationary currencies.
Okay, I agree with that. But it's not exactly what he's saying. Okay, so printing money, I mean, it depends how you print it. So if you print just assets, so you're printing just currency, like we just print a bunch of paper bills, that's different than printing money in the process of making a loan, because that money is encumbered. So if you increase the amount of money, but you also increase the amount of debt burden on that money, you could, quadruple the amount of money, but you're also quadrupling the amount of debt burden on the society. So you might not have the amount of inflationary impact in prices. Okay. So that's not really the case. I mean, if you look at it like he said 8%. Okay, let's just go with that 8% over 60 years, which he's including the great inflation of the 70s. But so if you just say, okay, 8% every year, how come the price of oil is not $1,000 a barrel or whatever, that compounding to 8%? Yeah, you can bring in technology, you can say all these other things, but overall, it's very hard to look out into the economy and find any single asset class that has grown by 8% a year. I mean, maybe stocks as a general index, maybe housing, but it's food has not grown by 8% per year. Over that time period, maybe 3% or 4%. So it's opening up a lot of holes once you start going down this inflation path. And also, it's just not correct that if you add more units, prices will go up. That's not the case.
And so over time,
okay, let me clarify that. It will tend to be the case over time. But if he's talking 20 years from now, again, we could quadruple the amount of money, quadruple the amount of debt burden with very little productivity gains, and it's going to be worse. It's going to be deflationary. The entire impact is going to be deflationary because people are going to have to slave away to pay off their debt. They're not going to be pumping up prices. Okay, that money is going in and it's coming out.
What this means is it's not just a niche little thing where a few internet nerds are going to get rich because their weird internet coins have pumped. At some point, the pumping can take you to stages where Bitcoin grows into something completely different from what it currently is or what it was initially. And that is truly a function of the liquidity. As the liquidity in Bitcoin grows, Bitcoin transforms from being a small market into being a more and more liquid market. And so it becomes more and more important for international trade and for international movements of capital. And so we're at a point right now where the Bitcoin market is around $1.4 trillion or $1.3 trillion. The global treasury market, which is the world's biggest, most liquid market, where the world's largest institutional investors and central banks park their wealth, the treasuries market is around $25 trillion. So Bitcoin has appreciated significantly quickly over the past, and it may well do this again. So it's not entirely outside the realm of possibility that within the next few years we could see Bitcoin exceed the size of the treasury market. At which point, it's not just a curiosity. At which point, it means that every large financial institution in the world faces a fiduciary duty to think about investing in Bitcoin because of the appreciation of Bitcoin, but also because of the large liquidity that allows them to enter and exit positions at that point, which is going to be, significantly large, similar to the case of treasuries. So if we look at Bitcoin over the last 10 years, it's done something like 55% compound annual growth rate per year over the last 10 years. If over the next 20 years, it does half of that, about 29% over the next 20 years or so, it becomes bigger than all of the world's fiat currencies combined and all of the world's government bonds markets combined. So at that point, it's far bigger than all of the world's other liquidity markets combined, at which point it becomes the world's dominant money. The game of what is the dominant money is a game where you win by having the biggest cash balances. The largest amount of cash balances today exists in the world in dollars, and that's why dollars are the dominant currency today. And I agree with Brent on a lot of his ideas about why the dollar is dominant compared to other fiat currencies, and we'll get into a lot of our agreements on this and some of the disagreements. But ultimately, what makes the winner in this game? In football, you win by scoring goals. In the game of money, you win by having the largest cash balances. The thing in which people have the largest cash balances is the thing in which they're most likely to trade. And that becomes the dominant currency over time. And so that's how gold became monetized. That's how within government monies, we see that the dominant currencies are the ones with the biggest cash balances, the ones that people want to hold, because for all of its faults, the dollar is still superior to the rest of the fiat currencies. But I think if you think of the economic reasons for the superiority of the dollar and you apply the analysis to Bitcoin, you can't escape the idea that for the same reasons, Bitcoin is likely to be dominant into the future. That's, I would say, a summary of my position.
All right. Well,
Okay, so I let him talk there the whole time. I noticed that he's making a leap of connection here between inflation. So 8% inflation, where Bitcoin has 0.8% inflation, and that will automatically transition into price increases and adoption. So it's going to be adopted more and more. It's going to get more and more liquidity. I agree with that, but not for the reasons, because there's no causal link that he's making there, because you can make almost the exact same argument for gold. And he did mention gold there, which I wonder if when he said it, he was like, oh, I shouldn't have said that term, because you can make the exact same argument for gold. It's 1% inflation, 1 to 2%, and that's less than 8%. So how did gold get demonetized? If that differential between 1% inflation and 8% inflation is enough to get Bitcoin monetized, how did gold get demonetized with that same, almost exact same differential? That's the biggest weakness of Saif's argument, because everything he says about Bitcoin and why it will grow should be applicable to gold, yet it was not. And anytime I would debate an inflationista, that would be the main point that I make. Brett doesn't even bring it up. It's a big miss, big miss on his part. Also, he said something about cash balances, and the largest cash balances wins. Right, but what leads to the largest cash balances? Because it can't be the inflation discrepancy because of gold. Why doesn't gold have the largest cash balances? So it cannot be that. There is no connection that you can draw between Bitcoin and not gold. Cash balances are something that are competitive, in my opinion, and they grow naturally based on the properties of that money in this specific environment. But see, Saif and other Austrians, I would think that he considers himself an Austrian, but other Austrians, they see the environment, the global economic environment, as static, as a given, when it's not. Okay, post-World War II, kind of a unipolar moment. Of course, we had the Cold War, but in the West, it was a unipolar moment. And then after the Soviet Union fell, it was globally a unipolar moment. And that is, and there was a lot of technology advances, a lot of productive uses of credit. And so that is what led to the desire for inflation, the desire for credit-based money, because they could use it. They wanted the elasticity because there was hyper-productive uses for it. All right. We don't have that today. We're oversaturated with debt. So the environment changed. And what money is good at in one period versus another period changes because the underlying environment changes. That's how you can explain why gold lost. Gold lost because in that environment, elasticity was preferred. Expansion was preferred by the market. The market chose the dollar. Okay. Now we're in a different environment that is the kind of the standard environment. The one that chose the dollar was very, very unique, but the standard environment chooses sound money. And we're going back to that type of environment. And so we're going to choose sound money again. And now we're talking gold versus Bitcoin, which is better. Of course, Bitcoin is better than gold in that scenario. So that's why the market did not choose gold. And that's why the market will choose Bitcoin, because times are a-changing. And one money that fits into one part at one time, a certain set of macro conditions, will not be best fit for every time. All right, so let's continue. We go into Brett now.
well said. So bottom line, Brent, is the Bitcoin's got more features and it's easier to use. And you're going to, at some point in time, have the same type of liquidity that you have in the dollar. And since it's superior, then everyone's going to gravitate over there. So what would your response be?
Well, I think I'd set it up with a couple different parameters. Number one, I would say what Safe has. Do you go by Safe, by the way? If I call you Safe, is that okay? Okay.
Yeah, that's totally
I didn't. Okay. Okay. I think he has laid out a situation in which the future is dominated by the sovereign individual rather than by the sovereign country, and I think that is a fantastic goal to have if that world develops.
All right, we got a question here from Boog. He says, what do you mean by deflation is the shrinking of the money supply, not prices, right? Yes. But deflationary is pressure in that direction. All right. It's pressure into the direction of a shrinking money supply. Inflationary is pressure in the direction of expanding the money supply, and hence then prices rising. But yeah, if I say deflation, I'm specifically meaning a shrinking of the money supply, a shrinking of total credit in this case, for the credit-based system. And inflation would be a rising in the credit, total credit. But if credit grows, but productivity of that credit shrinks, you have a deflationary pressure, right? Because it's harder to meet the debt burden. As you add more debt, it becomes harder and harder to meet the debt burden. And then what happens? Then people default and it contracts. So deflation results from deflationary pressure, and inflation results from inflationary pressure. I hope that's clear. Okay. Let's continue here with Brent.
I would embrace that world, and whichever thing the market chose to be money, I would happily abide by that result. And if it happened to be Bitcoin, then so be it. But I think a lot of the problems, the issues, the negatives that he has brought up are from the point of the view of the individual. They're not necessarily from the point of the people that issue the money. And if you think that all of a sudden, for the first time in history, it's going to be a free world where governments have no power, they cannot exert force, and it is a decentralized world rather than a centralized world, perhaps Safe is right. I would argue that for that to happen, we would have to go through an incredibly difficult period of time. And during that period of time, I think the US dollar, for all the reasons I've laid out on several occasions, would go much higher than it is today. And I think as the US dollar goes higher, it makes some of the issues that Safe has brought up that work really well for Bitcoin may not work as well in that environment. Now they might, I can't say for sure that they won't. But in my mind, just because something goes up in value doesn't mean it's a currency. Houses are not currencies. They could theoretically be used as currencies. Tulips were used as as a speculative asset. And some people, I suppose, could say that they were used as a currency. But again, I would set it up that, I think moving to a world, as much as I would like to see it, where the sovereign individual is the king rather than the actual king being the king, and in a world where the market was free to choose its money, I think potentially Bitcoin or something like Bitcoin has the opportunity to do really well.
Okay, so he's setting up a trap for himself in this, in my opinion. So he's trying so hard to create this dichotomy of individual world of individuals or a world of a solitary sovereign. But of course, it's somewhere in between, right? It's lots of individuals, and then there's different classes of individuals. There's the aristocracy, there's the king, there's all these other things. Within the issuer, if you're going to, and he knows this, if you say who issues dollars, he would say they're issued in a loan. He'll say they're printed overseas when they issue dollar-denominated loans. So dollars are issued in the act of making a loan in a kind of a decentralized way. So who is this sovereign that he's saying is going to stand up against Bitcoin? So he's trying to pigeonhole Safe into this individualistic world of the sovereign individual. But his position is equally as wrong. It's this monolithic sovereign that will not take it. But what if a couple people out of the aristocracy start doing it, and then a couple more, and then a couple more? All right, it's who are they going to fight? Are they going to fight amongst themselves? Maybe. But they're not going to be fighting Bitcoin. They're going to be fighting amongst themselves. And that's how it works. It's somewhere in between being completely individualistic and completely collectivist. So that's what I would say. Also, he says that the dollar is going to go higher. Why is the dollar going higher? Because there's a dollar shortage. Because as the debt burden goes up, you need more dollars to pay off the debt with, principal plus interest. And so there's a dollar shortage in that world, or you could say it as a monetary shortage. And Bitcoin can step into that role. So one reason why there's a shortage and why the dollar is going up is because the global economy is begging for some monetary value, begging for something new. This old system is not functioning properly. We need something new. And so that's going to peel away some of the aristocracy. That's going to peel away some of the businesses that want to hold Bitcoin instead of maybe holding a treasury on their balance sheet. So slowly but surely, this gets peeled away. So that is what I would say is going on there with Brent. I have a couple things here written down. Again, his best argument is to ask, why did gold fail? If it's all about the discrepancy between inflation of dollars and inflation of Bitcoin, that Saif cannot answer. The only thing he could say is that it was dictated, but then that would say, oh, well, we're not going to dictate Bitcoin. We're going to dictate against Bitcoin. And now he just ruined his whole argument. So if you just say, hey, why did gold fail? That's all Brent has to actually say. Yeah, I have a couple more things, but let's go on.
I do not think that automatically means all of the advantages that Saif laid out about Bitcoin. I don't think that automatically means Bitcoin wins. In many ways, the reason that Bitcoin has gone up so much in percentage terms, and listen, it's the best performing asset in history. I don't deny that. But a lot of it has to do not just with the increased issuance of the US dollar, but it has to do with the increased issuances of governments all around the world. And the reason these governments all around the world have issued all this currency, and the reason that Bitcoin has performed better in currencies other than the dollar than it has in the dollar, is those governments and the people running those monetary systems and those monetary sovereign domains don't want hard money any more than Jay Powell does. So in order to change the money, you have to change the power structure. Now, perhaps Saif is arguing if the money is the type of a money that...
I mean, what is the power structure, Brent? The power structure is not monolithic for the dollar, okay? The power structure is a system of banks. You would agree with that. They're printing dollars all over the world in a decentralized fashion when they make loans. So this is not some monolith that gets to decide. It's a mix between individuals and one giant monolith.
That the government cannot corrupt, and therefore the power structure will change. The money will change the power structure. Again, I think that is going to be a very difficult battle. And I think the last thing I'll say, and then we can kind of get into more of a back and forth, is I don't really have a problem with Bitcoin itself. Conceptually, I love the idea. The problem I have is when I interact with people in the Bitcoin world who tell me that it cannot possibly lose, it cannot possibly go down, the governments cannot possibly do anything to impede its rise, and the governments cannot possibly win. I would say that history says that that's wrong. Now, if you believe that Bitcoin is the change and is the revolution that is going to change the history of the world, which is a noble cause, then join the revolution and storm the castle. I just think the walls are a little bit taller than you think they are, and I think they're armed a little better than you think they are, and I think that it's not a given that an individual sovereign currency is going to win just because many of us would like it to be that way.
Can you just...
All right. So what he said there about, I'd have to rewind it. I was swatting at a gnat that was flying around my microphone. He said that history doesn't agree with that, that it can't lose, that yada, yada, yada. Well, come on now. Let's go back to 1871. What happened? The world was going to a gold standard, and Germany and the US at that time had finally demonetized silver. China stayed on a silver standard, but the world was going towards a gold standard, and try to fight it as much as you want. The market will win. Okay. Every time it switches between standards of money, it does not matter what the sovereign does. Okay. It does not matter. We can even go into like Bretton Woods. There was competing interests there. There was discussion back and forth, and the world went a way that stayed on gold at that time. So the market is pushing this one way or the other. And also the Eurodollar system. You know, how did we change from a gold standard to a credit-based standard? Goddamn Nat. We changed because the market drove us in that direction, right? The market of shadow banking started lending dollars around the world. There was actually a conscious effort to get dollars, export dollars, and start up this whole system of the credit-based dollar. But that was very much a market-driven force. That was not a centrally planned thing by the sovereign. And so, every time that the monetary system changes, most of the time it's the sovereign that's losing. And it's the market that is forcing everybody's hand towards a money. So I do not think that Brent's historical argument here is backed in any case. I mean, I would challenge him to find a case where it wasn't the market that pushed it towards a change. All right.
Explain why it matters. Because I'm someone that's interested in Bitcoin or gold, for that matter, to sound money. I don't care, or at least this is the narrative. I don't care what happens to the dollar versus other currencies. I don't. That doesn't impact me. Can you just explain quickly why that matters? And then I want to go over to Saif and have him explain how he sees this transition playing out, because I'm assuming that's his position.
Sure. So and I'm glad you brought this up, George, because one of the great things about the rise of Bitcoin or crypto, digital assets, however you want to define that space, is that a large number of younger generation citizens of the world have become educated about the monetary system and the negatives that can be applied to the individual from the government by using the the currency as a tool. And so as a result of that, and because we're in a situation where central banks are doing extraordinary policy all around the world, not just in the US, there's this rising belief that fiat versus fiat does not matter. And as a result, all you have to do is own Bitcoin or own gold or own hard assets and just sit back and relax. You don't have anything to worry about. And I would caution people against that view. Again, it's incredibly important to understand that. And having that knowledge is an absolutely incredible advantage. But it's not a given, and it doesn't mean it's going to be easy. And the reason that I say that fiat versus fiat does matter is because the most powerful entities in the world issue the fiat. But forget the governments for a second.
No, I mean, the most powerful entity in the world is the market. Come on, bruh. The most powerful entity in the world is the market. So even these other countries that are supposedly issuing their currency, which of course many of them are ruled by the banks, and the dollar system is a bank-centered system. So they are not in charge. The market is in charge. That is the most powerful entity, and you can't fight the market.
Look back at every financial crisis for the last 40 or 50 years. Now, I'm sure there's one or two exceptions that people can find. But by and large, almost every financial crisis that we have had has some element of a carry trade gone wrong in it. And a carry trade is basically when you borrow in one currency that you invested in another currency or in another asset. And you borrow it in the cheaply yielding currency or the cheapest currency, and you invest it elsewhere. And it's typically done in a currency that you can't print. You don't control it, and you can't print it. And that all works great because currencies lose value. Fiat currencies lose value. The problem is that when those currencies move against each other, even if they are all falling versus real things for the moment, if one currency moves dramatically versus another, it causes a liquidity crisis, and then it becomes a financial crisis, and then it hops from one country to another. All of a sudden you have a regional crisis, and then eventually you have a global crisis. That doesn't change just because you own gold or you own Bitcoin or you own real estate. And every time we have had a significant liquidity event, assets or currencies or gold or Bitcoin, whatever you want to call it, however you want to label these things, fall in a liquidity event. And the reason they fall in a liquidity event is in a liquidity event, there is not as much quote unquote money to go around. It's a deflationary event. Now, historically, the governments have been able to get it under control.
Now, this is not the case on a gold standard. Gold did not plummet. So I think this argument is kind of moot. I agree that when we're not on a Bitcoin standard, that Bitcoin will sell off in these crisis type events. But if we're on a Bitcoin standard, that will not occur. And that's actually one of the reasons to go onto a Bitcoin standard. And so I think this is interesting, okay, but it's pretty much moot. Okay, so the last thing, this damn gnat is going to be the death of me. The last thing I want to go is to Safe's best argument, and it is at 5640 something. Like, comment, subscribe, guys. Put if you're watching on Twitter, jump over to the YouTube or Rumble. Comment, subscribe over there. Appreciate you. Okay, let's listen to Safe's best argument. This is about game theory and adoption of Bitcoin.
Breakthrough that has implications. New technologies have implications on the way in which society functions. And so what this means is that people are going to have more options. Now, how this actually plays out is difficult to tell, but I think it's worth keeping in mind the levels of empowerment that it allows the individual and how these translate. So on the one hand, you can just take your Bitcoin and leave the country. On the other hand, there's the aspect of, as growing number of Bitcoiners have a growing balance of Bitcoin, they can influence the politics. So you can have more senators and congressmen and politicians and presidents. And then they don't want to
now,
put
by the way.
Which is happening right now. And perhaps even more important than that is, and I think this is the point that I feel there's going to be some poetic justice in this, in that the people who have studied Keynesian economics, the people who repeat the status theory of money, are going to be left like the Japanese soldiers on the deserted islands of the Pacific fighting the war of fiat money, while the people who own the fiat system are going to recognize that this new Bitcoin technology is so much profitable than the debt slavery farming system that they have that is called central banking, and switch to it. And I think this is truly remarkable because in the last couple of years, we've seen BlackRock, we've seen the biggest names on Wall Street start to get into Bitcoin, which is, I think, quite telling and quite interesting. Ultimately, what we have here is, I use the metaphor of gunpowder often. With gunpowder, it's a technology that allows the holder of the technology so much more power over people who don't hold it. So the question then becomes, do you, as a current person in power, as a current king, as a current president, do you ban this thing or do you try and use it? So it's nice to think, or obviously it would be nicer if you could just uninvent this thing and continue to maintain your privilege of printing money forever. But the smarter governments are going to realize, all right, party's over. There's a new technology in town. And now the real money is to be made not by printing money, it's by holding the scarce money. And I think a lot of people are going to realize that holding Bitcoin, stacking sats is more profitable, not just than playing the stock market and trying to trade in the stock market, but also than running the fiat cartel, running a central bank probably. And so there's...
Okay, so that's his best argument. Let's recap here. Before I take a look at the comments, if you guys are watching, put your comments down below. I think you can do it on Twitter as well if you respond to this stream. So Brent's best argument that he did not even bring up is, why did gold fail? If that inflationary differential is why Bitcoin will be chosen, why did gold fail? And Safe can't answer that without undermining his own argument, because he'll say something like, oh, it was dictated or mandated that you couldn't use gold. Well, okay, well, why won't that happen to Bitcoin as well? Brent's weakest argument, I think, is placing the issuer as a monolith. Of course, we know that it's not just the issuer. First off, I've said it many times here, the banking system is a system of banks. It's not just a single issuer of the currency, at least for the dollar. And there's all sorts of different classes. So, I personally on this show, I know it's very popular in Bitcoin about the unbanked and bottom up adoption. I'm not so into that. I think it's being adopted by billionaires and multimillionaires, and that is what this aristocracy is and how things change. So uh, it is really important for them to adopt it, and then the central power can't really do anything. The central power can't even fight the market. We've changed currencies many different times, and even the backing of currencies from silver to gold to credit, now back to Bitcoin. And so the market is in charge. That's Brent's weakest argument, is this monolith that it's Bitcoin is fighting. Safe's best argument is the game theory one that we just listened to, that the gunpowder analogy. If you can get ahead by joining Bitcoin, you're going to get ahead by joining Bitcoin and holding your cash balances in Bitcoin. His weakest argument, again, is not being able to answer why gold failed. You have to bring in the idea that times are different now. The economy is different now. And the situation that disfavored gold and favored elastic credit-based money is now going the other way. So you have to understand this as an evolution, not only an evolution in money, but an evolution in the habitat or the climate that money finds itself in. Okay, so you have to look at it as a holistic thing. So that's one of the things I do here on Bitcoin and Markets is I not only study the money, but I study the environment in which the money finds itself. So that's a unique niche that you guys can count on to have unique content here in Bitcoin. All right, let me check comments and see if there are any. Again, I'm live streaming at a little bit different time, so some of my main commenters are not going to be here. Let me check and see if there's anything up on Telegram. Nope, nothing there either. Okay, guys, we'll check out bitcoinandmarkets.com. I'll go back to the homepage right here. This is where you find all my stuff. You can join the free newsletter. I have been putting out, let me go back to the homepage. So I have been putting out a lot of the podcast versions of these live streams, and I've been sending them out as emails. I think I'm going to stop doing that. So if you ever want to catch up with the podcast, you can go to the website here and just do podcast, and then it will just do all the podcast episodes that I put out. Or of course you can find that on all your podcast apps. But I'm not going to be sending those out as an email anymore. I write premium content. I write free content here on the website. So check out bitcoinandmarkets.com. All right, before we go, one last time, checking the price, pumping a little bit, 91,000. We will see if this is the breakout here. A lot of 13Fs are coming out. There's a lot of good stuff with the Bitcoin Strategic Reserve that we went over at the beginning. So there's a lot of positivity in the market. I just think it's going to be really hard for us to go up right here. Looking at the RSI, we were oversold. We're very oversold at 85. We're still oversold. It probably needs to cool down a little bit. And to do that, we need to go up in a direction like this first before we really break out. But anyway, that's my analysis of Bitcoin at this time. And that's it. So guys, thanks for joining me. Like, comment, subscribe. Try to answer all the comments that you put down below on Twitter and Rumble. And that's going to do it for today. So have a great weekend. Spend time with the ones that you love. That's what's really important. Yes, Bitcoin is pumping. But why do we like Bitcoin to pump? Because that enables us to live a better quality life with those that we love, provide for those that we love. So, just think of what's important this weekend, and I will see you guys on the next one. Bye.